green Christmas, brown Christmas. Yeah.
They have the same URC.
Oh, all right. Did you get your cake?
Yep. Requires one-on-one specific.
Yeah. And
What exactly are you doing?
Because it's like, you have to go to this grandma, and then you have to go to that grandma, and then you have to go to this aunt, and then you have to go to that.
Good day.
And then we always
Learn
go to
about
church.
taxes?
And so we can never play with
Everyone here already knows about taxes.
This is just tell us anything we don't
My
know
Christmas, I
already.
don't, I didn't have bad Christmases, but I just remember it being so hectic. And my goal is to one day just leave and like celebrate Christmas in like California or Florida or something, and not have to go to anybody's house. Yeah. And then already it's
Where you take
like,
to?
my stepdaughter's like, well, when are we gonna do, you know,
After
Christmas?
they're
Let's do it on
prepared,
Christmas
you
Day.
go
I'm
to
like,
there.
I can't. You know, I'm gonna be at my aunt's on Christmas
Cool.
Day. Well, we can do it in the morning. I'm like, no, I'm doing Christmas with the boys.
Do you have
Well, maybe it's more
start a
in the
business? Do you
afternoon.
have a
No.
full-time job or something already? Or what do you do?
I did foster
So
care for
now, yeah, I'm kind of like the over.
and so I'm all about getting the business all right.
Oh, yeah.
Doing the paperwork, putting it all in a row.
Yeah, you're the good client.
No.
Get it all
No, I
organized.
have other people do it for me. I don't do it. I just watch it.
Yeah, but organization is a lot of the battle.
Yeah, that's why I said I had a rough day. And talked to the Chipotle goes to school, superintendent.
Yeah.
We changed
Yeah, that was fun.
quite a few bathrooms ever in our house. It's awesome. It's not something that can figure it out. Yeah.
It's almost paper organization season again.
Yeah.
2 more weeks.
We don't even enjoy Christmas. We pretty much have Thanksgiving, enjoy that a little bit, and then it's straight down.
Downhill.
Yeah.
So
Just the
then
beginning,
it's like my
actually.
mom, my dad, his mom, his dad, grandpa, grandma on his side, grandpa, grandma on my side. It's just,
Yeah,
I
getting
just,
in the end.
yeah, you just can't do it on.
Turkey Christmas? No. Sleepless nights.
Particularly when there's a pending tax bill that they're not going to pass. They're going to wait till the 30th.
This one will be nice. Yeah.
Okay. Welcome everyone to our final class in the Money Smart for Business Startup. We want to thank you all for joining us this last 8 weeks. It's really awesome for you to be here. That's what our country is based on, is free enterprise and people who want to start up a business and make the U.S. what it is. So thank you for your, what's the word? Participation, but also your courage to want to start up a business. So we have here tonight Walker and Michael from Bogue, Wybanga, and Bradley. They're a CPA company in town, and they'll be talking about tax planning and reporting. We have our extra materials from previous classes. If you missed any, I know we emailed some last minute and got some printed out for you, but if there's any you missed, they're here. And then we also want to introduce Ms. Katie Mora. She will be helping out and taking over, filling in for Amy while she's off for the next few weeks. She's a business consultant with the SBDC, and if any of you need her assistance, she'll be available to you. So thanks again for coming, and enjoy the night.
Thanks for having us tonight.
Yeah.
We share in your enthusiasm in the tax world, so we like to try and keep it light. We've got a lot of general topics to discuss tonight, so obviously everybody is familiar with the tax world a little bit. Varying levels, I'm sure we have a multitude of ages out here, so we'll just kind of get going here. Do any of you have businesses already, or have any familiarity with? Do you?
Well, I do, but I haven't hit a tax season. I just just got licensed in September, so.
Gotcha. So are we all comfortable talking a little bit about our businesses? Like what do you got going?
Mobile barbecue trailer.
Nice.
So.
Is it going all right for you so
yeah,
far?
it's going for I got licensed just in time to shut it down for winter, but the little bit of time that I was able to do it, I've done some catering stuff over the cold months, but it's gone really well actually.
Licensing process went all right and everything?
Yeah, it went a lot better than I expected it to. I think it was more of an internal freaking out on all the regulations and licensing and all that stuff. But once it came down to the inspection, I mean, really it was fairly clean cut and simple.
That's probably pretty unanimous. The hard
Yeah.
part is like sit down and it all seems overwhelming starting a business, I would think, right?
Absolutely.
So we do a lot of sitting down one-on-one with people. So outside of this, like Tia said, we have cards up here. If you guys have questions that you're maybe not comfortable talking about in front of everybody, feel free at any time to give us a call. We're happy to help business startups. So were you before your business started W-2 job, or have you owned other small businesses or done anything
Nope.
like that?
Nope, first one.
Gotcha.
So
Total learning experience.
Yeah.
Brave.
Here we go.
said I was going to do it, and it took me 18 months to really build the trailer and get licensed and get through everything. But it was like that. It was that never ending. Like, it was never going to get there. And then,
Mhm.
like the day that I got licensed, I was sitting in my house. I was like, holy shit.
Oh yeah.
Now what do I do? My whole job was getting it licensed. Once it was licensed, I didn't know where to go with it.
Yeah.
Okay.
But
So the
no, it's
first-
working out good.
The first tax season will be, or the first tax period will be, you don't know what you don't know yet, but after that, it's just organizing stuff and continuing on what you're doing. So these are, you guys can read this. This is basically what we're going to try and throw out there for you tonight. There are so many different kinds of taxes, and depending on what kind of entity you are, or if you're going to have payroll and whatnot. So we're going to kind of break it down. Right here, it talks federal, state, and local tax reporting requirements, and that's income tax, payroll taxes, and in Mount Pleasant and a lot of other cities in the state of Michigan right now, we have, along with real estate taxes, personal property taxes, potentially, and then down to the other bullet point here, we're going to identify methods for researching the local, municipal, and county. This one's tough for us. We can assist, but we don't do a lot of walking people through the licensing process because we all have different requirements. We can, not tonight point you in the right direction, but there are resources out there on the state of Michigan's website. Lara, I don't know if you guys have worked on getting licenses, you've seen that name. The book and different requirements they go on and on. So right out of the gate, anyone looking to learn anything specifically tonight, or anyone have horror stories that have actually gone through the tax seasons before, or anything like that? No? Not a lot of experience yet?
Yeah, all novices,
What's that?
all beginners.
Got ya.
How to keep track of as many write-offs, and
Yep.
for most startup businesses, don't you expect to maybe not make money or show that you didn't make money?
In the first couple of years, generally, if you spend more. I mean, you're talking about building the trailer. How long did you do that? And then you were open for a month before you closed it down. So yeah, I'm sure you didn't make back 100% of your investment yet. So
Right.
So yeah, that's typically the plan. Is in the first year or two, you have more out than in, but you're ending up building a business, building a client base, or building a relationship with people that ends up turning into a business.
Right, and that's part of, we have a lot of slides coming yet, but part of what we want to talk about is how to organize software systems that are out there, or just general tools of the trade, I guess, that we've learned. So we'll get to, right out of the gate, managing the tax obligation.
Yeah. So really the biggest thing is to get informed about everything. It's hard to know exactly what you're getting into, but like you said, getting the license wasn't as hard as knowing that you had to be licensed and knowing everything that has to be done. So staying informed about what you're doing in your specific business is the biggest thing. And then there's things that everyone has, payroll taxes, income taxes, that are just general. Planning for these, saving for them are huge. You don't want to get behind on taxes. You never want to come to owing a ton of money at the end of the year and not realize until a week before, boy, I didn't do anything to set that aside.
And we'll get to a general rule of thumb in terms of savings and planning like that. A lot of us, like he and I, we're employees and we have the W-2, we get the paychecks. So we don't really have to plan or save because they're taking the money out. We don't have to think about it. It's nice. We
Right.
prefer not to think about the taxes that we're paying anyway, so
Right.
good on that one.
I think might be a little far away. So business taxes, starting at the top there, income tax, the one everyone knows about. Basically, you pay a percentage of your income tax on, if it's a individual, file a form at the end of the year. There's different tax rates that you kind of got to know as you make more money. Tax rate goes up, you owe more tax. And we'll get into these in a little more detail, but self-employment tax, if you are considered self-employed, have a sole proprietorship, there's a self-employment tax. It's about 15% that covers your Social Security and your Medicare that would be paid in if you were a W-2 employee. So if you're on a W-2, your employer is paying a portion of that, and then you have some withheld from your check. But self-employment tax, for if you're self-employed, you're paying both sides of that. State income taxes, very similar to the federal income tax at the top there. State income tax in Michigan is a straight 4.25%. If you're operating outside of Michigan, obviously you have to know all the regulations and the tax rates outside of that. Employment taxes, that's going to be your withholding on your employees for the most part, and your unemployment. You have to pay into an unemployment system for your employees so that if they're eventually laid off, they have benefits, or able to collect unemployment.
And that's the other side of when he was talking Social Security. So if you're self-employed, you're paying both sides of the Social Security and Medicare. Employment taxes, if I have an employee working for me, they only have to pay one side, I have to pay their other side.
Sales tax, not everyone is subject to sales tax, but if you are subject to sales tax in Michigan, that's 6%. Again, other states, if you're selling things out of state, you gotta know what those rates are and be able to collect it. And that's mostly a expense of whoever you're selling your goods to. You collect it from them and pay it in, but that is a tax that's owed to the state of Michigan. It's not, so not 100% of what you collect is actually yours. A portion of it's a sales tax. And then local taxes. Mount Pleasant doesn't have a local tax, aside from like personal property taxes, where you pay taxes on your equipment or on your property. But there's also, like City of Lansing, City of Saginaw, City of Detroit all have city income tax. And so that, again, has to be paid in, withheld on your employees if you have employees, and tracked.
The sales tax there, and I want to ask you guys, number one, if you have questions on any of that, but sales tax probably could have a little asterisk next to it because the state of Michigan has made it so complex to understand everything that you should charge on or should pay on. It's a pretty big moving target. And if you guys ever had, again, like we'll say across the board, if you guys ever have questions on if you should on certain transactions withhold it or charge it, check with a professional for sure, because the state of Michigan has a publication that's hundreds of pages long that we can get and reference and whatnot.
So I have two questions that typically come up with my clients.
Yep.
So if you're performing a service, do you have to charge sales tax on the service? And if you are selling something like a product and the price is $14, but it includes tax, so you want it to be like a flat amount, like you're buying something for $10. How do you calculate the tax on something like that?
So the services, generally speaking, no, you don't have to charge sales tax on that.
Okay.
In a general standpoint. Calculating, it's typically software based. Are you talking like if they're trying to pencil it out?
I have a lot of clients that want to kind of keep it like, okay, we're selling this t-shirt for
$3,
$10.
$10.
Yeah, like,
Right.
like for you
Yeah.
selling at a food.
I actually asked her this question the other day, because like with me, I have like my menu items, I don't want to charge $10.32.
Right.
I make a flat menu item of $10, and when I first made my menu, in my head I was thinking, it's easy, you just take 6% and that's your sales tax. Then I got to thinking about it, and my sales tax isn't technically 6% of the $10.
Right.
It's 6% of like $9.42,
Yep.
which gets me to the even $10.
Yes.
So
So
really,
now I've got to go back and recalculate all these,
right.
like what my actual sales tax was from all my transactions.
So really, you're selling your product for $9.42.
Correct.
collecting 10 because that's how the
Yeah.
math works out
So
for the
is-
sales tax.
Yeah, so I guess the question would be, is there like some type of reverse calculator that you can put in and say?
Not that I've ever found. I have to play with Microsoft Excel, or we have software that we plug it into,
Right.
and literally I can check a box that says tax included in gross sales or not included in gross
Yeah.
sales. I've had to gross it up. Off the top of my head, I probably right now can't pencil something out for you, but
Yeah.
it's
It just seems like
it's
somebody
a
could make
pain
a
like that.
calculator and it'd be so simple. But,
Sure thing.
Yeah.
There you go.
you know, give
But
them a business
if
idea.
you were doing the books for him, he could say, okay, I made $10,000 this year and that includes tax. And you could check a box in your software that
Yes,
would calculate that
yes,
for.
yeah,
Absolutely.
Okay.
Or if I was sitting at my computer, I could back into the number for you. We could.
Okay.
So what would
It's-
what would you suggest going forward would be the easiest way for them to calculate that? I mean, would they take their figures and go to you and you check the box, or to figure out all kind of like the formulas ahead of time and then formulas ahead of time? Okay.
Yeah.
Microsoft Excel, does everybody have, like legitimately, we use Microsoft Excel for all of that kind of stuff very frequently.
Yeah, you could
Set
also
up a
probably-
formula, like if they take my software away from me, I'm gonna set up a formula in Excel that's gonna calculate that for me so I know how much to properly remit.
Yeah. You
Google
just
Sheets
save
is
it.
free and you can do that
Yeah.
also.
Yes.
Yeah.
Yeah.
And you can probably find some kind of calculator out there on Google somewhere. Google is everyone's friend.
Yeah.
Yeah.
Truly.
I've tried. It's
No?
like they all want to give you the 6% of like $10. So
Yeah.
I end up going back to the, okay, 942 times 6%. Oh no, that's only
How close do you
998.
come?
943 times 6%. Well crap, that's 1001.
Yep.
You know, so it's just like,
What was the you probably
Well-
you'd probably have to take, well, spitballing, take it, divide it by 1.06. Does that get you to your number that you're charging tax
That's
on?
what I was gonna say, but
I don't know.
that-
You'd
that's
have,
what I
to,
would do
you'd
is
have to check my math on that.
divide your number by
divide by
1.06.
1.06. See how easy that was?
I don't know. I'm just.
Yeah.
I'll double check.
With an asterisk next to that, don't just take that and throw that in there. Double check it. But yeah, it's something related to that, or that will at least get you really close.
Yeah, that got,
You know, in a
if you
general.
divide $10
works.
by 106 is 943.
Yeah, so that's gonna get you, yeah. And the other thing is,
Yeah.
On the fly.
when you get to the end of the month, you know, or the end of a day, your sales tax doesn't always work out because you're charging $10. If it's really $942 and a half,
Right.
you know, you can figure it off your gross sales. You don't have to figure it on a per item basis.
Yes.
So at the end of the day, if you sold $1,243 worth of stuff, you know, you don't have to go back through and figure, okay, how many $10 items, how many $6 items. You can just take that gross number, figure out what makes it 6% sales tax,
Yep.
and pay that.
You do it across the board, same way.
Yeah.
Like you charge flat amount for everything. You just say
Well, I mean-
tax is included in gross sales, basically.
Yes.
Yeah.
Okay.
But it's just, I guess, for when you put a new item on the menu, you want to know that your price point is,
You need to gross it up.
yeah, you need your gross margin in there.
Yep.
But then
Right,
you,
you're not really charging.
I don't want to include the 6% in my gross margin because it's just kind of the middleman for that, you know what I mean?
Yep.
Mhm.
So, okay.
Yes, in sales tax, you are considered a middleman. It's the whole time considered the state's money. That's never your money. So you
Right.
are entrusted to hold on to that money until you're required to pay it in. So, you know, with all these taxes,
And we're gonna get back
That's
into
how
that
a
with
lot of it is.
employment taxes, income taxes. There is specifically a slide that we want to talk about this on, but sales tax and employment taxes, as business owners, hypersensitive to getting that stuff paid into the state and the federal government because they don't have a lot of patience for you holding on to their money. General rule of
Right.
thumb. Anything else on taxes? Anybody else? Nothing yet? Tax types? Good to go? Alright. So all the taxes we talked about before, specifically income and employment taxes and whatnot, get spun off of these different corporations. Does anybody know the difference on any of these already or between any of these already? Anything?
We had a class covering it. So
Yeah.
A little bit.
The tax implications of any of them or not yet? Because that's what we're here for, right?
We covered a little bit, not a lot.
Gotcha. Okay, so right down at the bottom, this is like your most general company. If you start a company and want to try and limit liability, a lot of times people will just go right in, find an attorney to help them set up an LLC so they can try and remove themselves from whatever they're doing. This is not its own entity type in the eyes of the IRS. This becomes all of those things. So you can have the C Corp, S Corp, partnership, sole proprietorship version of a limited liability company for income tax purposes. So these four up here are actual tax entity types. The sole proprietorship at the top. What's your name?
Doug.
Doug?
Yeah.
Are you a limited liability company?
Yeah.
So probably, do you know if you drafted any of these other kind of documents? Or did you just set up the LLC?
I just set up the LLC, and I had the tax lady that I was talking to, I believe, and I'm just looking at the S right now. She either told me to, when I actually file it, it's going to be as either an S Corp or sole proprietorship. I don't remember which one she said.
Okay.
I just remember the S.
Probably for your situation getting going, you would end up as a sole proprietorship. And how general businesses go, if you're starting a business like you have, you're going to file Schedule C as it's a form that goes in with your 1040. So it's basically your business on your personal tax return.
Yeah, that's how she explained it.
Okay, so if you're sole proprietorship, you're either going to be a Schedule C business or a Schedule F business. Schedule F is a farm. So if you're a farming type operation, those are the two real sole proprietorship type entities on your personal income tax return. And that's what a lot of people go with when they're starting out. Profits are going to be kind of low for the first year or two. Partnerships would be like your situation, but you and I are in business together, and we're going to share profits and whatnot. We could set up an LLC, and we're going to display or report our income and expenses to the federal government as a partnership. That is going to be Form 1065. Specific form with the IRS. It's its own filing. One thing I didn't mention right out of the gate, regardless of what entity you go with, once you set up a business, you're going to have to apply for a federal ID number. I don't know if you guys have all done that or not already. Banks make you do it, and if you're going to file a tax return, you have to do that. And when you're going through and getting that number, you have to tie it to one of these entity types right out of the gate. And if any of you have walked through that process, they tell you right on their website that you have to decide what your LLC is going to be taxed as. So the partnership, the main thing with the partnerships, if you're actively participating in it, the tax impact on the other side, once I mentioned that they're flow-through entities, the partnership and the S corporation, it all comes back to you guys paying tax on your own tax return. The partnership and the sole proprietorship, your share of the income comes through to you personally, and then Michael talked about self-employment tax earlier. You'll pay self-employment tax and income tax on those earnings. The S corporation that your lady mentioned to you is kind of an in-between with the C Corp and the partnership, but the purpose of the S corporation is to help you avoid some of that self-employment tax on all of your earnings. The IRS allows you to set up a company. If you know you're going to be making money, you can establish a wage to pay yourself, so they're still getting some of their employment taxes, and then the rest of it still flows through to your personal return, but you only have to pay income tax on it. So if you get to the point where your business, the bottom line is $100,000, that entity type makes sense, because if you're reporting it all as a sole proprietorship on Schedule C, you're looking at, if your bottom line is $100,000, paying 15.3% on that bottom line, and then the entire amount goes back to page 1 of your tax return, and you pay income tax on that amount again. So it's almost like a double taxation type thing. So if you're on the S Corp level at that point, you pay yourself a wage of $30,000, $40,000. So they're only getting that 15% on a smaller portion, and then the rest of it you pay income tax on. Does that make sense? I'm throwing a lot out there very quickly, so if you guys need me to reiterate anything, please let me know. The C Corporation, total standalone entity. You can own shares of the C Corporation, but for all intents and purposes, it pays its own tax, and it's a tough entity for you to get money out of it. Totally establishes a break between you and your business, and if you take money out of it, you pay tax on dividends. It comes out as dividends. Whereas those other entities, your money's your money still. You can take the money out for the most part in a general standpoint without getting hit as dividends and paying double tax. Anything? Like I said, that was a lot. Any questions from anybody? For the most, do we all know, have we all seen attorneys and set up LLCs, or I know you have. Anybody else made it to that point yet?
I've set up an LLC, but I haven't sat down with an attorney yet.
You did the paperwork and sent it to the state?
The
and whatnot?
LLC,
Mm-hmm.
I did it through Lara.
Oh, yeah. Yeah, you can do it all yourself.
Online.
Yep.
Yeah.
Cool, so you have an LLC already?
Yeah.
Okay.
And if you are going to be a sole proprietorship, it's easy enough to do it online. I would recommend if you're going to elect to be a corporation or a partnership where you got someone else, to advise a professional on it, but it all can be done online.
Yep. You can go right on the Lara website. Does everybody know the Lara website at all, what I'm talking about? Anyone that's had to go out and get licenses?
Well, how do I find it?
I think it's LARA.
LARA.com.
I think it's www.michigan.gov.
Lara/Lara.
Yeah, it's on there.
Yeah.
That's right.
So it stands for Licensing and Regulatory Affairs. So anyone that, like in the food business, he's got to have a license.
Yeah.
As
Our
professional
licenses.
accountants, we have to have licenses. They want to slap everyone with,
Yeah. They keep
Keep it all
track of
above
you
board.
and charge everyone $50 at the end of it.
Yeah. Should I be pointing at? Yeah.
There you go.
There. All right. We kind of just touched on this, but anyone else? Does anyone else have earnings, deductions? Where are we at in the process? You're obviously going to be having a tax filing requirement this year.
Yeah. I'm taking it all to my accountant. I'm just kind of.
Hey,
He's been
here's
doing
where I'm
my-
at helping
Yeah,
out.
He's been doing my personal income taxes for the last 2 years, so it's just.
Yep.
It's expensive, but it's just the easiest, simplest thing.
Well, and it's tough, especially when you get going, to know exactly what you need
Right.
to do. So it is helpful to have that.
Yeah.
And we'll get to that also later, but nothing wrong with that.
So I'm starting an online business, retail,
Okay.
and I bought all my inventory this year and I have a lot of expenses, but the business isn't actually opening until next year. So I was told that all the expenses I've done now, I can include as startup costs when I actually make a profit next year.
That's probably the way I would handle it. I mean, there's no point in taking on all this inventory and having a huge loss this year and then not having any expenses in the following year. Typically as individual sole proprietors, actually I'm being kind of general with this, but for our purposes, like as an employee, I'm a cash basis taxpayer, and there's another slide about that, but as a cash basis taxpayer, when I get income, I pay tax on it, and when I incur expenses, I get to offset the income with that in the year that it happens. So the accrual basis of accounting is all about matching up inflows and outflows in a way that is an accurate representation of the earnings flow. Does that make sense? So like, you buy your inventory, it's not fair to say that that's an immediate expense when I'm not even trying to sell that for 3 months. That doesn't make sense on a financial statement. So if you're going to be carrying inventory, you're more of an accrual basis business, and that's where it comes back to the point that you made about, yeah, you're gonna carry that over and use the inventory as an expense when you're selling it. Does that make sense?
So for this year, I just pretend like I'm just me. You know, like I didn't.
As
Like,
far-
I don't mention anything of all those business expenses.
Keep track of it all. I mean,
Oh, yeah.
obviously you want to still,
Yeah.
and it can be reported and carried forward. So we can
Yes.
record inventory on your
Inventory.
tax return in that you spent the money, but that you haven't sold it. So you still have it. So you've invested $5,000, you have $5,000 worth of inventory. And then when you sell it, if you sell that for $7,000, that $2,000 will be the difference in the next year.
Well, you probably incurred other expenses that would qualify as
Yeah.
something that would be deductible in the current year. So categorizing it all, listing it all out, and detailing it is the best method, just like he talked about.
Right, you can carry it over.
Mhm.
Do you have to say that same situation? So she would have like all of the startup business expenses. And does she have to claim them in 2018? Say she operates a business in 2018 and has a loss in the business. So would it be, can she carry that over to like 2019 when she's profitable and have those startup costs offset the profits when she's profitable? Or do you have a
Typically-
timeline that you have to claim that?
Typically, you put it in service or utilize them when the business actually starts. Like, it doesn't make any sense, like we talked about, if it hasn't actually started yet, we're incurring costs and accumulating them.
Okay.
We're not always gonna expense them immediately. There are, I can't remember the exact threshold. You
For
can,
what's considered startup.
yes.
Startup costs, there are things specifically titled startup costs that we can capitalize as an asset of your business. You've invested money into getting it legally set up, getting it registered, licensed, and if it's a significant amount, it can be carried forward and expensed over several years.
So when he said capitalized, yes, then you carry it year over year. Has everybody heard the term depreciation? Yes. Or amortization, it's the same general process of utilizing a life or recognizing a life of an asset versus expensing it immediately. So,
Yeah.
good question, Mel. You good on that?
Mhm.
Okay. All right, so employment taxes and tax forms. Probably a lot of us haven't really thought about having employees yet, don't have employees yet, no? Okay, so employees are, generally once you get to that level, it's expensive to have employees, especially if you have seasonal work and they're going to be drawing unemployment from you because your unemployment rate climbs and you just end up having to pay the state more for that. But right at the top here, at the federal level, there's annual Form 940 that you have to file if you have employees, and then quarterly Form 941. Form 940 is reporting wages, total wages, and then wages subject to federal unemployment, and the federal unemployment rate is 0.62%. The 941 is, earlier Michael and I were talking about employee withholdings. Like if I'm a W-2 employee of a company, they withhold federal income tax, they withhold Social Security, Medicare, and state income tax. Form 941 is my federal income tax, and then Social Security and Medicare tax, and then also that other side that we talked about, the employment tax, the other 7.65% gets added onto that, and that's a quarterly return that you pay into the federal, or file with the federal government. Payments vary depending on how much payroll you have, how many employees you have. You might have to pay the taxes that you withhold from these people in weekly, bi-weekly, monthly, or quarterly. Additional stuff that's not up there. We talked about sales tax earlier. Well, filings with the state of Michigan on a monthly or whatever the frequency basis is, there's sales use and withholding tax. So I mentioned my employer would be taking state income tax out of my pay. That's another filing that needs to get made on a periodic basis. The state establishes how often you need to file. But that report is Form 5080. if you've paid sales tax, you've probably seen that form already, or maybe you
Yeah.
haven't had to remit it yet.
No.
So there's Form
There's
5080 and then Form 5081. That's just throwing numbers out there. It's not going to mean anything to you guys until you have to file them, but that is how we remit sales use and withholding tax to the state of Michigan. And the other thing that's not up here is Form 1028, which is a Michigan form all through, again, actually you kind of come back to Lara. They have an additional website for state unemployment tax. SUTA is the slang term, I guess, but that is a rate that varies significantly. So if you just set up a business, typically they'll throw like a 1.5 to 2% unemployment tax rate at you. Unemployment taxes are based on the first X amount of wages that employees have for you, and they just try and create a base for employees if they do get laid off to draw on unemployment. We all are aware of how that works. So those are periodic throughout the year. Everyone knows what a W4, W2 are. If we've worked, the W2 type jobs or been an employee before, we have to fill out how we want the employer to take taxes out of us. The W2, everyone knows probably what a W2 is. A big thing to consider when you're looking at employees is 1099s. So right out of the gate, a lot of people don't like to hire employees because it's expensive, because there's the additional unemployment, FICA, whatnot. Something to consider though, if you're going to have anyone work for you, the IRS is very critical of people that we pay as independent contractors and don't issue 1099s to. So if you're going to have anyone work for you, a general rule of thumb is have them fill out Form W9, it's called, and that's just a request of their name, address, social security number. That way, if we make payments to them throughout the year, when we get to the end of the year, if it's above the appropriate threshold of needing to issue a 1099, we already have their information and we can just kick that out. And that threshold is $600. I don't know if I saw that in the pack or not anywhere, but yeah, I'm sorry. We're throwing a lot out there.
You should be very careful about whether you pay employees on a 1099 or not, because the IRS also has, I think, like a 12-factor test or a 10-factor test to help you determine whether that individual is actually an employee, which you would have to withhold the taxes on, or whether they're an independent contractor. And the gist of it is that if the employee is under your control, you tell him where to go, what to do, when to be there, how to do the job. You provide uniforms, you provide tools, and he has to do it in a certain, 8 to 5. That's an employee.
Yep.
But if you say like Katie and Tia, they're independent contractors for the SBDC. So we, can you please connect with this client? This client needs this type of assistance. We tell them what they need to do, but they determine.
They set their own schedule.
Yes, they set their own schedule. They determine how they're going to work with that client. They determine when they meet, where they meet. So they are independent contractors where I am an employee. I'm here 8 to 5 and I work for the college and I do the same thing they do, but I am technically an employee of the college.
It's a long list of tests. What, when, and how these people are doing the work is generally going to answer your question. If they're doing what you tell them, when you tell them, and how you tell them, then they're totally at your discretion. So they're probably gonna, if they had to argue it out, I've only seen it happen one time where there was someone was paid as an independent contractor, and then they had a disagreement when they were terminated. Ended up coming back suing my client, the employer, and the employer had to go back and pay in all of their Social Security tax that they had not withheld from them and they hadn't gotten credit for. So it can get ugly. So it's something to pay attention to. I mean, it's one thing if you have your buddy's kid come work with you a couple times a year and you end up writing checks for $600, $700. The IRS isn't really going to get in a huge yank about you issuing him a 1099 in a situation like that. But if you clearly have someone that's working for you on a daily or regular basis, then it's time to treat them as an employee.
Who would they go to help them walk through those steps? Would that be you at the accounting firm, or would that
Of
be
establishing the relationship or getting everything set up?
of determining whether or not this particular individual should get a 1099 as an independent contractor or a W-2 as an employee? How would they work through that process?
IRS.gov has a detailed checklist like she's talking about. I would say start there, and if you have a question about any of that, you can call us, you can call other tax professionals that you already know.
That would probably be more of an accountant type question.
Yes,
as opposed
definitely.
to an attorney.
Definitely an
Yes.
accountant type question. Anything else on any forms or anything like that?
Something I wanted to add, just because I get a lot of it, especially from startup businesses. We kind of mentioned the taxes here, but they start to add up and people don't realize how much it adds up. But be aware that when you're paying someone $10 an hour, it's not $10 an hour of expense. You know, you have taxes on top of that.
It's $14 an hour, $13 an hour.
Yeah, sometimes it can run up there. And different tax rates, so your unemployment rate's different per person, so you kind of got to know what that is, but just be aware that as far as employment taxes go, it's tax you're paying, not just that you're withholding from an employee.
Now, if you hire people as part-time employees, do you still fall under having to pay them all the unemployment taxes and all that other stuff? If they're just part-time employees?
Yes.
You do?
So they're not necessarily eligible to claim unemployment, but how, at least Michigan, different states have different structures, but the way Michigan works is when you pay in unemployment, it actually goes into your identification number, and they keep a balance of how much you've paid in. And then they subtract from that how much has been drawn against you. So if all you have is part-time employees, you're going to build a balance in that account, and they will actually lower your rate every year.
Yep.
So you'll start at 3%, and then if you pay in 3% for 2 years and no one's drawn any unemployment against your account, you'll have a balance there, and they'll say next year you only pay 2%, and the year after that you only pay 1%. And it gets down to, I have someone paying
Very low.
0.6. I think it's the lowest they go, but it gets down to the point where it's negligible. It's just...
Like you said, they track you based on your employer identification number, and then they track each one of your employees based on their social security number. So they know what that person has paid in on their behalf, and that helps establish what they can actually draw against you in that situation.
Does that work in the reverse? So if you are a seasonal employer and you have a lot of individuals that claim unemployment, say in the winter, does your rate go up if you
Yes.
have a lot of people that claim it?
Yep, I have a client that I can think of right now that's like 11 to 12% because they lay people off. They lay half their workforce off in the winter, and it's part of the nature of their business.
So you start out, say, at 3 is the base rate, and then does the IRS then come to you, or who, the state of Michigan, come to you and say, okay, this year you're going to have to...
They send you a nasty gram in December every year
They
saying,
do, okay.
hey, this
So
is the rate we
you're
set
very
for
much
next
aware.
year based
Okay.
on what happened.
They calculate it every June. They take the balance in your account and they say, okay, you're either ahead or behind where we want you to be. Because they have a goal target for you too. If your payroll annually is $50,000, they say, okay, we're going to make you pay a little higher rate until you get to at least a $10,000 balance, because that or $8,000. I don't know the number exactly, but once you hit that point, that's when they start to lower the rate for you. But yes, you can run your account negative because if you're not paying in as much as your employees are drawing off, which is totally possible, and then the state kicks in and then the federal government kicks in money for their unemployment, you get behind and you get to a perpetual 12% rate.
So what if you're paying your employees on a 1099 and then your employees file unemployment?
That's
against
typically how you get in trouble.
Okay.
Well,
For that, that's typically how it's brought about that you should have been an employee and you're not.
Yeah.
Okay.
Is they think they're done and they go file for unemployment
Yeah.
and they're not eligible.
Okay.
So, and back to a note that we brought up earlier, these tax forms up here, along with tax that you owe and are paying in, like the unemployment isn't anything that you're withholding, but the 941 or the 5080 that I mentioned, or the sales tax, these governmental entities look at that as their money. You've withheld it from these other people, so if you get behind on payroll taxes, which is very easy to do because you're, like Michael said, you're not thinking that, hey, I'm paying this person $10 an hour and then it's gone. All of a sudden, that liability adds up, and at the end of a quarter, you might owe $2,500, and you weren't really planning for that. So it's just important to, if you're paying them, whether you're using the green ledger sheets or you're using QuickBooks Online or Intuit Payroll, whatever it is, keep an eye on the balance that's going to accumulate, and make sure that you're not basically dipping into the kitty and using their money for operating expenses, because getting back on payroll taxes doesn't go away really until it's paid off. Different than income tax. Income tax is your beef with the government. Payroll taxes are all your employees' beef with the government, and now you're in the middle and don't want to be there. Talked a little bit about this earlier, the permits and licensing. Anyone actually have a DBA, not an LLC or anything? Same kind of thing. That's basically going to fall back to the sole proprietorship type business. Totally fine. Different than registering with Lara. You'd probably just go right into the county building in town here and get that set up. I don't know what the fee is for that, but
$10.
$10? Yep. So like I said, the licenses, I can't speak to exactly what license everyone needs. We can help do research with the state to figure that out on the Lara website, but I mean, they've got a pretty good search feature. So state, county, city income taxes, Michael kind of touched on that earlier. State sales tax. So if you guys get to the point where you have taxable sales, you're going to have to file an additional registration with the state of Michigan. It's Form 518, Michigan Treasury Online, MTO. No, you didn't mention MTO, did you?
No.
MTO is the actual website.
Michigan
That's
Treasury
the abbreviation for Michigan Treasury Online. Most people are probably better off consulting with tax professionals for helping them get set up. That's the same for payroll taxes. If you're going to have employees, you have to go through that registration with the state of Michigan. Not saying that it can't be done. It's just something that we do on a regular basis and can help walk through the form that much quicker. But Michigan Treasury Online is the website that you need to go to, and they have, what's that?
What form is it?
The form is 518. Yep, and there's like a 13 or 14 question packet that you go through online, and then they'll send you your sales tax license, and they tell you how often you're supposed to remit taxes and your different requirements.
So a question on the state sales tax also, you mentioned earlier that some services are not necessarily applicable to state sales tax. So in my case, I do catering jobs. So if I quote a catering job, can I say that, okay, X amount was the prepared food cost, I'm required to pay sales tax on that. This amount was the catering service, I don't have to pay sales tax on that part of that job.
If you detail that out on the invoice you send out and it's reasonable, it's not all the food was $1 and all my services were $3,000.
They'll look at reasonableness.
Yes.
Okay.
Then
Because currently what I've been doing, I've just been taking, basically quoting the job and then adding 6% sales tax on the entire thing. But I could break that down within a reasonable food cost, catering service.
Split it out in a way that's reasonable for you, and then apply that going forward. Because if you get audited, they're gonna look to make sure that, hey, you got this $15,000 job, but you treat it the same way as these $500 jobs.
Yeah.
You know what I mean?
But I have to have that on the invoices specifically. Because typically, like my catering menu is, $14 per person, because it's just easier to break it down.
So
when people are looking for catering jobs, they do it per person.
Instead of saying $14 per person, say it's $12 for food and $2 service fee for you to be there and prepare it. So it's still $14.
Gotcha.
But that's how I would recommend breaking that down. So
All
you
about,
can say, just so you have an argument when if the state were to show up, because the state will come look at randomly your sales tax and whether you charged it correctly and paid it incorrectly. When they show up, you can say, look, I sold $12 worth of food, $2 of it per person was for me to make it, you know, perfectly reasonable, and then you can just charge sales tax on the 12.
Documentation.
Okay. Right on.
Documentation is your only concrete support in the event of an audit. If an auditor comes in, whether it's IRS or state, and it's 3 years ago and you don't know how you came up with those numbers,
There was a big thing in Michigan that a few years ago went after oil change locations. And what they said was, a lot of these oil change places, it's $49 to get your oil changed, flat. And they didn't detail it out. So the state went into all these places, and what they said was, you charge $49, you sold $49 worth of oil then. We don't know what you did, but what you did was charge $49, and what you definitely did was sell oil. So that must be what you did. So that's, I mean, you look at it now, there's all these softwares that the invoice you get from an oil change place now, particularly, I don't know if it's just state of Michigan or if it's everywhere now, is a full page, everything that was done, whether it was labor, parts, you know.
they're
as they
going
go.
for as much money as they can get.
Right.
So you have to have something that you can show them. No, that's not how it went.
Yeah.
Just like he said, detail it out.
Yeah. Are you,
Well, back to that though, if you have the documentation for your wages that you paid out, couldn't that factor into it then?
it's all, yes,
And
yes,
that's
but
documentation.
in the situation of the oil change place, they might look at that as overhead.
Yes.
You weren't selling the labor, it's part of it, but so is turning on the lights, you know, and so they might group that in and say, well, we're not gonna consider that as part of your sale.
Well, that just doesn't seem reasonable.
I agree.
There's a lot of that.
and it's auditor by auditor, because you could have auditors show up that woke up on the wrong side of the bed today and they're gonna push the envelope.
I spoke with a state of Michigan auditor today that was at a client's office, and I was on the phone with him, and he said this is a gray area. If I go into this and if I open this up, it's going to cost him a lot of money. So what I'm going to tell you is tomorrow you charge sales tax on that, because I'm pretty sure they're not, and I'm not going to look. So he was nice enough to give us that. He was nice enough to say, look, I see, and I'm not. They're generally not there to bankrupt you as long as you're not, you know, as long as you're making effort. You know, as long as you're not intentionally trying to get around paying tax. But that, it really is, he said, you know, if it was somebody else, they might. So it can be case by case.
Yep. And just as a rule of thumb, taking the extra 5 seconds to throw a little extra detail on something now helps your tax preparer, and it helps you, CYA, in the event of an audit, for sure. Because I hate taking the time to do, you know, make a little note on a receipt or this or that. It seems like it just takes too much time, and I'm always go, go, go. But you get to the end of a year, and you don't remember. You don't remember that specific transaction in April. So you guys had.
We take every receipt and we highlight
Yep.
what's spent,
Yep.
and that has to be in, because we have to put everything into a certain bin, and at the end of the year, take it all out, staple it all together, and put it
Yep.
all in file. And that's what you're saying that we have to do,
Yes.
basically.
Detail.
Have to detail it,
Yep.
show it.
And if they want to come audit you, a lot of times they pick an item. They say you sell, they want to see how many times you sold this particular item at this dollar amount, make sure you're charging sales tax on it. That might be all they want, one line item type thing.
So that was
Go ahead.
that was us trying to identify what potential tax obligations you might be facing. I feel like a lot of us probably out of the gate are going to be looking at reporting our business income on our Form 1040s. They got the 15th circled there. Generally speaking, once if you're doing this full time, this is your job, you guys are going to want to be paying estimates throughout the year so that you don't get to the end of the year and get hung with a huge tax bill and don't know how to pay it. The IRS wants you to do it that way, and they set up the 4th, 6th, 9th, and 13th months of a tax year for you to pay in your estimates. And they want you to kind of keep track of, typically your tax preparer or tax accountant will help you figure out how much to pay in for the following year. But if you're booming, you know, your profits have tripled from last year, probably touch base with your tax accountant, or just plan on, hey, I need to get some extra pay in this quarter. They call them quarterlies, generally speaking. but estimated taxes are paid in April 15th, June 15th, September 15th, January 15th for any given tax year.
And
So
so,
that's-
but that's different than 4, 6, 9, 13 month. Fourth month.
It's,
That's 6, that's only 2 months in between, 79, that's 3 months in between.
Yes,
and
they're-
then there's
they're
4
uneven.
months.
They call them quarterlies. They're not really quarterlies.
that is-
Those are typically the filing requirements for a
Yeah.
1040 taxpayer.
yeah,
April, which is the 4th, June the 6th, September the 9th, January, after the year. Their intent with that is, okay, the year's over, kind of figure out where you're at, and they give you a few days to do that.
And the
Make
reason-
your best guess as to where your tax is gonna fall.
and the first one isn't due until April 15th, because that's typically when you file, that's when you're required to know what your tax was last year. So if you're basing it off of last year, they can't make you pay they don't make you pay a payment March 15th when you don't know what should be paid until April 1st, you know. So that's why they're uneven. It is hard to track though. I mean,
It's hard to track
from
when they call them quarterlies and they're
Yes.
not
Yeah.
exactly quarterlies, but
yes.
it's the lingo.
So you pay, on these dates, you pay federal income tax, self-employment tax, and sales tax,
Though,
right? Your estimates of those three.
So, well, sales
So-
tax is actually due at the end of each quarter. Different,
Oh, the real quarter?
yes, the
Okay.
real quarter. Yes.
I don't want to go. I don't know that it's going to be
That was the real
productive for us
quarter.
to say
Yeah,
all of these taxes are due on these dates because it's case by case.
Yeah.
I can't tell you when you're starting your business when your sales tax is going to be due, because when you register with the state of Michigan, they establish based on the information you give them when they want you to pay your sales tax. If you're not going to have much in sales, they're not going to make you pay every month. They'll let you pay quarterly. So that's kind of one of those situations where when you go through and register, they'll tell you when to pay.
Yeah.
So the only hard dates that I want to throw out there are those that I just gave you for your personal income taxes. Form 941, those are hard filing dates. But I don't want us to get hung up on dates right now because that's a whole different ballgame and it's going to confuse. And if you have those questions, like we said before, we have cards up here. We're happy to walk through dates and deadlines and whatnot. We talked about that one already.
Yep.
There you go. Kind of talked about this one.
Yeah, money management, we kind of got into earlier, knowing how much, knowing when, knowing that when you pay someone $10, it really costs you an extra $2.50 at some point, depending on when you have to pay that in. Setting that aside when you can. You know, every time you have payroll, if you're paying out $100, set aside $25 in a separate account or wherever you need to put it, that you're not spending it. You know, because that's not your money anymore, and that becomes critical when it comes time to pay that in.
It sounds ridiculous to think that, hey, I need to actually, me personally, I'm guilty of it all the time. I'm not going to touch my savings account. I'm good with that. I have the discipline to leave that alone. And then all of a sudden, credit card bill for the next month comes. Dang it. Literally, the most common thing that we see is people don't take that to heart when we talk about set the payroll taxes aside. Setting up an account, my best recommendation would be set up a separate account, put the payroll tax money that you know you're going to have to pay in that account. You're better off going and getting a loan or getting a 0% interest credit card, putting money on that credit card and carrying that balance than using this money and being short when you need to pay your taxes in, because they're going to come get it. They will show up at your door, they'll send you nasty letters, they'll levy bank accounts. It's real, and that is a huge, huge roadblock for new businesses. They hire employees, and they're short on cash because they're growing their business, and they get behind on payroll taxes, and a year and a half goes by, and their business shuts down. From my interactions, the leading roadblock.
Yeah. That's like you said, cash flow is the biggest thing for the first couple of years. You're putting a lot of money into it, not thinking you're going to have to pay out, but then when you do, it ends up costing you more in the end than if you were able to set it aside.
Yep. We all have sophisticated accounting systems in place already, I'm sure, correct?
Or no.
Everybody's paying thousands of dollars for the fancy computer and all the software. I typically recommend every year for small clients that I have that start up, Microsoft Excel. Most of us have a computer with Microsoft Office on it, month by month, because realistically, if you guys come in with a box of receipts, I organize it into a profit and loss statement in Microsoft Excel because that's the easiest, quickest way to do it. My recommendation would be, if you guys want to give it a go on yourself, which starting out is the most affordable way, use Microsoft Excel at the end of the month, get your bank statement, get your receipts, your checkbook, and just put it in. Have income line, however detailed you want to make it, just do it on a monthly basis. Excel is everyone's friend. Business accounting software, if you get beyond Microsoft Excel and it's too tedious, you don't like it anymore and want something with more functionality, QuickBooks is probably what I would recommend.
QuickBooks is the easiest.
Very
to get set
usable,
up.
and
Yep.
most accountants know their way through it.
Yep.
Cash versus accrual accounting, we kind of got into that earlier. We continue to learn about that on a daily basis. You can head as far down that rabbit hole as you want. Generally speaking, your guys' businesses you're going to want to treat on the cash basis, but another conversation when you sit down with whoever your tax preparer is going to be, kind of explain to them the flow of your business, how it works, and they can help figure out if the cash method or the accrual method is the best way to report everything. Does everyone understand deductions and what that term means? Or what are actual expenses for your business? What are capital assets? Yes, no?
Yeah.
No.
Okay, so you said you have inventory, correct?
Yeah.
You just buy items, sell them online? Do you have to produce anything, or you buy it wholesale, sell it retail kind of thing?
Yes, but the products are being made in Egypt to my specification.
Okay.
So there is kind of a design process.
Okay, so that is effectively your cost of goods sold, your inventory, your cost of goods sold. That is a deduction type item. Cell phone, paper pencils, accounting software.
Internet connection.
Accounting software is kind of iffy. Internet, yes. Things that are, I call them perishable. I know we're not talking about food, but immediately usable within 1 year's period of time. Those are deduction type items. Now, if you have to buy a computer for a few $1,000s for your business, that is called a capital asset, and that is when the depreciation term comes back in, something that we keep track of, we capitalize it, it's called, and expense that over a period of time.
So most deductions are expensive, basically.
Yes.
Yeah.
Most of your small items, most of your month-to-month stuff.
But if you have like a monthly plan with QuickBooks, why is that not that is expense? And if they want you to.
That would be.
Yeah.
Yes.
It's software too. And also if you're renting a place to store your inventory.
Rent expense. Yes.
Yeah.
Interest, if you have a vehicle or you have a loan on a qualifying asset, interest expense.
Anything that helps contribute to the business. I mean, a lot of people don't think about it, but if you only have one cell phone and you use it probably for both personal and business, at least a portion of that is a deduction for your business. You know, anything that contributes to it.
Or a room in your home, potentially.
Yep. Yeah, if your inventory, if it's stored in your home, then you're not renting a place, but you're using up a resource that you would otherwise have in your house. You get to use that as well.
So deduction is kind of the broader term for expenses. Expenses are typically, like we said, the immediately used items. Deduction can include things like depreciation of a capital asset. So it's kind of the umbrella term. Anybody else? Question?
Okay, so you said like a room in your home. So if that's a deduction, is everything affiliated with that room? You know, electricity,
Yep,
insurance,
it can be, so,
all of
so
it.
if you own a,
Mortgage interest?
Yeah,
yep,
okay.
Security.
typically based on
Okay,
square
really?
footage, so if you have a 1,000 square foot home and 100 of it is a room that you have your stuff in,
Mhm.
then yeah, 10% of your
Everything.
maintenance and your ongoing costs can be related to that.
Okay.
Cool, isn't it?
Nice.
And you
really
can
big
count
room.
that.
I only use 100 feet personally, the rest of it's for the business.
You can count that whether that's where like your home office is or whether you're storing inventory there, if it's for business
Yep.
use.
Yep, the IRS likes to scrutinize home office deductions, so my lavish example there, they'd probably argue that down to something smaller. But legitimately, if you have an office that you use only for your office and you use your garage, you can't even park in the garage, you're using that for inventory, that kind of stuff qualifies.
Well, you could consider a percentage of your garage area.
Mm-hmm.
Yes.
Certainly. What was your comment right out of the gate?
Oh, your goal with taxes is to minimize without evading.
Yes.
Yes.
So you want to
Evade
lower.
is bad.
Yeah, you don't want the IRS to think you're evading, but you want to take advantage of all the deductions that
Yes,
you can.
right.
So you're lowering your tax base.
Be creative, ask questions.
Right.
Yeah.
Ask a question. Don't be afraid to ask a stupid question about a deduction with your tax account.
Right.
Ask them, does
Yeah.
this qualify? Because I don't know.
We've even heard like a small business say, well, that sounds shady. It's not, it's shady.
No.
No.
The
You wanna take full advantage.
IRS and the state of Michigan openly acknowledge there are gray areas.
Yep.
This is our interpretation, this is their interpretation, and be aggressive.
Yeah, I think the big thing is documenting and being able to
Yep.
say, all right, my house is 1,000 square feet, I'm using 10% of it for my business, I'm deducting 10%.
Yep.
But keep in mind, like they said, if you are claiming something for a home office, the IRS, that's gonna be one of the things that, I don't wanna say kicks it out of the system, but is going to definitely increase your chances of being audited. So if you have all of your paperwork in order, you know, there's really no need to be concerned. Just make sure that you have everything
Documentation.
documented as clearly as you can. And if you have it documented and you can justify all the expenses, you know, your chances of, if you get audited, coming out of the audit clean are really good. But that is one of the big things I believe that
Yes.
that
And if you
red
have it
flags you
documented-
within the IRS.
If you have it documented and you get audited and they want to know why you did it, you can tell them this is why I did it and why. You tell me why you think you know better as to why it should be different. You know what I'm saying? But if you don't have the documentation and you haven't written out why you made the assumption you did, then you don't have a leg to stand on when you're talking to the auditor.
And could that come into play also, like for my circumstance, I currently rent my house. And it just so happens that really my house is right next door to my landlord. Really everything outside is theirs. I just have a spot to park, but I park my barbecue trailer outside. Could I claim part of my rent is for the storage of that barbecue trailer outside on someone else's property?
That would be pushing it. I wouldn't try and claim all of the rent.
Right,
I think that you could probably take a small amount of that and qualify.
Like a reasonable amount, like if it would cost me, I mean, if it was equivalent to like a storage fee would cost at a storage lot, and I claimed that much of the rent.
In that case, I think I would get something maybe from your landlord.
Yes.
So
Like she
there you
said,
go.
hey, $300 of your rent is for your house, 200 of it is. That's good. Like I've never encountered that. I've never.
Yeah,
Okay.
so your landlord, he probably doesn't care how he gets his money.
Right.
Yeah.
Because he's gonna have to pay, you know, taxes on whatever it is. But if you have some type of agreement where, yeah, you're living there, but all the space outside is his, I mean, it would depend on what kind of relationship you have with your
Yeah.
landlord and what kind of document you can put together, but
That's a
having
good question.
documentation in that case is gonna be important.
Yep. And I don't know how that would unfold. That would be a point of, this is the interpretation that we made. This is how we did it. As long as you're not trying to take $1,000 a month for rent.
So along those same lines, if you get to the end of the year and you have this kind of revelation about doing this, and can the landlord then give you some type of document, a piece of paper that says for this year's rent that you've paid, X amount would have gone toward the house?
Yeah.
Okay. Because that's kind of after the fact, you didn't think about that when you started
No.
renting it, but.
Right.
Well, right, and you probably have a
Some
lease in place,
documentation.
but what you could do is have it modified or say, can you split this out for me? Because they might legitimately charge him less rent if he wasn't taking up space outside.
Yep.
You know,
Or he could say, now you're paying $100 more a month.
Right.
There you go. Be careful on that.
Yeah.
You get the deductive, but it costs you money.
Since you're gonna run it off, exactly.
Another recommendation I forgot, but that I like to make to new businesses. I use credit cards a lot in my life because they all have cash back on them and I like free money. But a lot of the credit cards that you find now, if you want to have one for your business, I encourage people to use that as, you know, depending on what your money management skills are, but use that because if you're not good at record keeping, but you put 99% of your business through your credit card or 90% of your business through your credit card, at the end of the year, you can print the neat little year-end summary sheet and it shows, here's all the money you spent in all these different categories. And if you've established it as a business credit card and don't really do anything personal on it, there you go, the accounting's kind of done. Or a lot of it, a piece of it. So, and you're making free money, so.
And on that
To
note
pay your
too.
taxes.
Yeah,
Yeah. Yeah.
right.
It's
What are you
a
saying?
circle, isn't it?
I was gonna say, if you are doing something like that, it does help a lot to have a separate credit card or a separate bank account that you run it all through. Because a lot of people will say, well, I put everything on the credit card along with all my groceries and everything else. Well, we get to the end of the year and what was this charge in February? So we're in February of the next year. 12 months ago, what was this $30? You don't know what you were buying or what.
At least half of that grocery is meals and entertainment.
I'm sure, I'm sure. So a couple options. We talked about doing it yourself. You can keep it in Excel, keep it on your own bank account, your own credit card, and track it yourself. Get QuickBooks if you feel up to that. But there are accounting services available, and a lot of them are. A lot of them will charge hourly. We do a lot of work hourly. So if you just have some quick questions, you just want to sit down, get some stuff straightened out. I have plenty of people come in and they just need to know what to do. So we sit down for 2 hours and I give them a schedule of all the taxes they got to keep track of and what to do through the end of the year. They call me if they have questions. But it's a not a huge expense necessarily because a one-time meeting might be a couple hours, but something just to get set up.
Well, the thing is, you guys are all good at the unique business that you're starting or doing what you do. This is what we do for a living. Help people such as yourselves start up the business. And if we don't know the answer to whatever question you have, we have superior research and knowledge of how to get to that answer because that's what we do for a living.
Yeah.
So it's just, if I weren't, knowing what I know now, if I weren't a CPA, I would have a CPA and use them as much as possible with questions because it's, like we said, we spend the bulk of our day helping small businesses in the community. I mean, statewide, nationwide, but specifically in the community.
Yeah.
How much can you expect, and I'm sure this is a huge sliding scale, but to pay for a CPA on a yearly basis? And
It depends on what
is
services.
it just like hourly, billed hourly, like
A lot of it's billed hourly. So, there's the clients I referenced that they come in and they want to be self-sufficient. They want to do it themselves and they can handle it. And as long as they're up to it, that's fine. Then there's, if you want us to file all of the sales tax reports, all of the payroll reports, make sure all that gets paid in on time, that just takes more time. Filing a tax return at the end of the year, same kind of thing. It's just, what services do you want? So yeah, it's a huge sliding scale, and just ask that up front. Say this is what I'm looking for, and just ask.
As much or as little as you guys want, we can provide a service. If you don't want to think about numbers, you just want to go kill it and sell your product, and you want to hand everything else over to us, we can do that. If you just want to sit down once a month and go over stuff for an hour, we can do that too. It's literally whatever whatever level of involvement you want from us or any professional that you find, you'll be able to get that level of service. So.
Well, the other thing some people don't think about is putting together the records. You know, it might be something an accountant can put together in a couple hours, and it's not a huge undertaking because I do it all the time. If it's going to take you a week to do it, and you have less revenue because of it, you're not able to go to work and do what you do, you know, things like that. Sometimes, you know, happy to help with that stuff and get it all put together and just organized.
And this is back to kind of what we were just talking about. Any kind of financial analysis, pretty much anything you guys can throw at us or other professionals, we can handle whatever the level it's on. There's someone out there. So
we actually have a document the SBDC does that it's what to look for in an accounting firm, and it basically is questions not really to ask your accountant but to also ask yourself. So is this something I want to do, or is this something that I need someone to help me with? Do you want them to just do your quarterly taxes or end of the year, or do you want them to help you work on strategy to kind of minimize your taxes? So it's just kind of, when you're meeting with an accountant, it's hard to know what questions to ask them. So we have kind of, I think it's like a one-page sheet, and I can share it with you guys too if you want me to.
Well, and the other thing is you can seek a personality. Like, we all have a pretty solid baseline knowledge. You can search for a personality that matches up with yours. Like, I like to be pretty casual. I have whatever level of expertise you need, but I want to know you as an individual first, and then let's talk strategy. There are people out there like that, or there are people that, these are my numbers, I don't want to know your life, I don't want you to know my life. Tell me how to make sense of this. Accountants come in all shapes and sizes for sure, so. Anyone seen the movie The Accountant? I'm not that level. I left that movie feeling motivated, but.
This is where you should have a clip.
Yeah. That was me! Did you have a question? Sorry.
Yeah.
I was just going to ask for your opinion about walking into an accountant's office once you are to the point of having an audit and saying hello to an accountant for the first time.
Yep, we do that.
I'm being audited.
We do that.
No big deal. And
I
hear that. I mean, I would think.
Oh no, because if you are doing it yourself, there's a lot of people that do put together their own tax return, and then okay, the IRS is going to come to my house. Now it's like. Now you don't know what to do about that.
The IRS they're much more likely to try and bulldog you than to come in and sit across the table and try and bulldog one of us or one of our bosses into a corner and argue tax law with us. You know what I mean?
Yeah.
You guys are just trying to organize and report. We spend our days learning tax law, so it's
to defend.
Yes.
Right.
Yes.
Right.
If you get in a situation where you're audited, do not handle it.
No, do not handle it yourself.
No, that will not.
The problem is just not knowing. They're going to ask questions, and just not knowing how to answer it can cost you money.
Yes.
That's the problem.
I need to look at that account.
Right.
Yeah.
And I would say, if you're getting audited, when you get that letter, meet a CPA, get someone you're comfortable with. Go have a conversation ahead of time because
move out of your house.
Jump stage, get out of here.
Our first step is generally I'll prepare a power of attorney form, have you sign it. I want to intercede as much as possible and be the person talking to the IRS agent. Just remove it. It's stressful enough for the taxpayer. Let me deal with it, and we can just reassure you in the process. And we constantly have audits going on. I have one going on right now. And for the most part, auditors are fine. Like, they're not mean people or anything like that. The thought of an IRS audit is intimidating, but a guy in there the other day was just talking about how he was going to Chicago to watch Michigan State play that night, and he was just trying to get out of there. You know what I mean? So, but I would definitely say get with a professional. Let us deal with your IRS audit or your state of Michigan audit. Again, that kind of reiterates what we talked about.
So how much in general should you set aside from your income for these taxes? I heard something about 35%.
Again, it's going to depend on
Yeah.
your specific situation.
Okay.
So
Because
it's
with
one of those
both
things we
ways.
can go through. If you're self-employed, self-employment tax is 15.3%. Based on your income, you might owe 10 to 15 to 25%. You know, it's sliding scale. You know, when you file your 1040 on your income tax, you can go through that and figure all that out. There you are. So 35% is not, I'm assuming you're self-employed, you're looking at 15% for self-employment. Let's say 15% is an average tax rate for a starting business. For income taxes, that's 30%, 4% state. I'm sure that's kind of how that number was arrived at. It really is, it does change. And I do have people that kind of manage that themselves for a self-employed. And it's kind of based on, you know, at the end of every 3 months, kind of look in your bank account and see how much money you have. Because that's kind of what it is. And I have people that, they'll bring me the estimates they paid, and they set aside X amount and paid in, and they just tell me what the amounts are. And you're going to know your business better than I will, especially in June. You know, we can run through the numbers, but you're going to know how you're doing. So, but as a general rule, 35% is probably
You'll be safe.
reasonable. Yes.
But 35% not of your sales, obviously, but of your bottom line after your
Right.
expenses. Yeah. And like we're saying, it's hard. It's going to be unique per situation because there are currently like 7 federal tax brackets, self-employment tax, state income tax.
Yes.
So I.
And we don't know how many kids you have in your marital status.
2 dogs.
Right.
Right.
I didn't quite hear that question, but was that a like a set aside?
Yeah.
To
Yeah,
for taxes? Okay, 35%.
For self-employed individuals, yep. And you're really paying closer to that than you think if you're an employee. So if you're an employee, let's say back to you're in the 15%, you're paying 7.5% in Social Security, Medicare. You know, your employer is paying 7.5% for you for Social Security, Medicare, so they're eating some of it. But the taxes paid in for you are still.
I spent a little time looking at my pay stub because we're getting close to the end of the year today, and it's just real disheartening to see how much has already been robbed from you during the year. So.
And this is 35% if you have employees or not?
That's just for you
Separate deal.
personally.
Not with employees?
No.
Okay.
So that's for, and I said, you know, take a look at your bank account at the end of every 3 months or so, because that's, you know, if there's 6,000 more in your bank account between March and June, you know, that's what you kind of need to base it on. I made $6,000, take out 35% of it, try to set that aside, paid in with your quarterly estimates we talked about earlier to get it in timely.
So
I
there's
just want to say thank you to everybody for your time letting us present to you guys tonight. Like I said before, I unfortunately have to take off now, but we have information. If anyone ever has any questions, I'm Walker, this is Michael. Fire them off. Email addresses are on there, phone numbers. So thank you guys. Michael will answer any questions that you guys have.
so the self-employment tax. I know, so this year, I know I'm filing as not receiving any wages for my business. I was literally only open for a couple months. I really didn't make anything and all went back into the business.
Right.
So I'm not drawing any wages from that. There's also something that I may have to work with, but as the sole proprietor of the LLC, there are times that I can take it's called like an owner disbursement or something like that out of the account to the owner. Is that tax the same as an employment wage?
That gets a
being
little
self-employed.
Being self-employed, you pay self-employment tax on 100% of your profit, up to that Social Security limit. So if you, let's say you didn't take any money out, you put all your money back in the business, but you still made a $5,000 profit, you still pay the tax on $5,000. If you're taking money out and spending it on living, on groceries and whatnot, that just tends to indicate profit. You know, if you're able to take money out of the business and the business still supports itself, the business is still running, that just would indicate you made at least that much money because you're able to take it out.
So it's basic
Yes.
tax the same?
Once
Okay.
once the tax is paid on it, you're paying tax on 100% of it either way. So once you've paid tax on it, that's your money. So if you get to the end of next year and there's $20,000 in the account, you pay tax on your income, that $20,000 is tax, or money you've paid tax on that you can take out and spend on whatever you want. If you go buy a personal car, pay down your mortgage, or whatever you do with it, that's your money now. Because you're self-employed, you own 100% of it. The only entity that's different is a C corporation. Like we said, it's harder to get money out of a C corporation. If you were to take money out, you have to declare a dividend and pay an additional tax on it. In general, we recommend, unless we're talking huge business, we stay away from C corporations because it is hard to get money out. And really, most business owners are looking to provide for themselves. You know, and at the end of the day, when there's money in the account, they want to take it out and go feed their family and pay for their car. You know, so.
With the S-Corp example that you gave, if I understood it correctly, the money that the business makes stays there. You give yourself a wage as if you're an employee of the business, and then you only pay the income tax on your wage, not on the income of the business. You pay income tax on both portions. You don't have to pay the self-employment tax on the additional that's not part of the wage. So really the S corporation made money. The S corporation is technically a separate entity. If the S corporation made $40,000 after it paid you a $30,000 wage, that is corporate income that then comes through to you as an owner. So you still pay income tax on it. It's reported on your personal return. The S corporation doesn't actually pay the tax. But then once the tax is paid, again, you're 100% owner of that business. You've paid the tax on those dollars. That's your money to take out.
So there's no self-employment tax on that
Right.
route then?
Right.
So technically, if you don't have a business partner, if you don't take any wages from the business and just let the business make all the money,
Yeah.
you're still paying income tax, but I would avoid the self-employment
tax. The IRS, you're supposed to pay yourself, sometimes it's called a replacement wage. There's several different terms for it, but basically if you put someone in your shoes and they ran the business, they did whatever you were doing, how much would you have to pay them? So if we're saying if you were removed and you put someone responsible in that position and you pay them $30,000 to do that, you're expected to pay yourself $30,000. So because you are working there, because you're active in the business, you're required to be an employee. You have to pay yourself some wage.
So it is required by law.
It is required. And where there's a huge gray area there with reasonable.
Yeah,
what's reasonable?
Am I the CEO? Am I the sales manager?
Right,
Am
right.
I the director?
So generally, as a business owner,
that's my ranking.
If you have two employees, the business owner is the CEO, the CFO, you're the manager, you're the end-all be-all of everything.
Yeah.
So to say you're going to put someone in that position and they're just going to do everything, it's really tough to come to a number. And even then, the whole point is you're not going to pay someone $80,000 to do that. You know, your business might not make that. So there is some gray area there. But what they try to avoid is if you're paying yourself a $10,000 wage for the year and your business is making $300,000, they say, okay, clearly you're contributing a little more than that, especially if you're the only employee. Because really there's no argument who else produced anything for the business.
But I guess also it's for your own benefit as an owner to take a cut of your profit, gross profit.
Yes.
And say, this is me paying myself for my work.
Yes.
Instead of having the profit as a pool of money where you take some for your own expenses and some for the business, you know.
Yeah.
So if you cut part of that money for your own as if you're paying yourself, I think it's even better for you as a business.
I think it does help manage money sometimes for people, because then you know if your personal expenses, if you can go on $40,000 a year, then you don't end up stripping money out of your business. You know, you don't end up just taking it all and then your business can't really function because you can't pay your payroll, you can't buy inventory next month, you know, that type of thing. So yeah, that is a one advantage I've heard from people, that it gives yourself a base amount that you know 40,000 is reasonable, and then at the end of the year, whatever's extra is extra. You can take that out then. So.
So did that 35% include self-employment tax?
Yes. Based on my rough, again, it's.
This is why I never went into business actually, because all this stuff is like, can just be so
Yep. And I would say.
surmountable that you just like, oh my gosh.
And I always tell people, if I do their tax returns, a lot of people I just do a tax return, and they run a business, and they don't even set up as an LLC. They fix cars out of their garage, whatever they do. They don't even separate themselves at all. They just do work and make money. Then I encourage them, just call, whatever. You know, if you have a question, if you think there's gonna be money owed, or you just don't know something, if there's an expense you don't know if you can deduct, or if you should track something, I'd much rather have a 5-minute phone call mid-year and figure it out. And that way, it saves you money, it saves me time when I'm trying to get your stuff together, and we don't have to try to remember, again, what happened 6 months ago. So I just encourage everyone whose taxes I do, if you have any kind of question during the year, call. And I don't bill for that. You know, I don't bill 5 minutes out. Like I said, in the end, it helps me out putting everything together.
It's always better to fix it before it becomes an issue.
Right.
Yeah, so if it takes 5 minutes, or if it takes, you know, an hour and you end up paying them $50, and that can save you thousands of dollars in an audit at the end of the year. When in doubt, definitely reach out to them.
Well, and the other thing is, if you don't ask about a deduction, and then you end up 3 years running, you could have been, you know, recording this against your income, you know, at 30%, 35%. It doesn't take that much to add up. It's just, you know, worth knowing. Getting informed. Knowing what you need to know is tough, but just keep asking, you know.
Very good advice not to commingle the tax money with the business money.
Yes, and actually we were going to touch on that. I'm not sure we missed it somewhere. If you do end up dipping into payroll tax withholdings or your income taxes you don't pay in estimates, the penalties can be outrageous. And I believe right now for making a late Social Security and federal withholding payment for your employees, if it's 15 days late, it's 5% penalty.
Oh.
So taking that out over the year, that's a lot, essentially. You know, so even if it's a short-term note that you take, or it's just super important that you get those paid in, because it just ends up costing you so much more, and then you're behind this month, then it ends up costing you 5% more, and then you just get the next month, and it's that much harder.
I
So
have a great
not get
example
behind.
for that. I have a client who purchased a business and didn't understand anything about taxes or anything like that. They just thought that at the end of the year, when they filed their income taxes, that would take care of their payroll taxes as well. So they didn't pay any payroll taxes their entire first year of business. And they've been in business 3 years, and they are still paying the IRS back for the fines and the taxes in that first year of business. So yeah, it can be a very, very expensive mistake. So if you're going to set your business up right, and you want to make sure you have all the right deductions, you pay everything in at the same time, you don't want any, you know, issues with the IRS, definitely an accountant is a great investment to get everything set up correctly in the beginning, and a great information source for you as well. Yeah.
And there's a lot of people that do their own payroll, do all their own stuff, but I just look over their quarterly reports when they go to pay in the Social Security, when they go to pay in the state withholding. They bring them in and I look at them. It takes me 15 minutes. But that way I can give them the assurance, yes, this is filled out right, yes, it's going to be paid in right. Make sure you get it paid in by the 15th or the 20th or whenever it's due. And then that way it doesn't end up costing them a lot of money, and on the other end, it doesn't end up costing them penalties to the IRS. So. Cool. So I think we have one more. I think we've been through most of it, but manage your taxes, self-employment, sales. So, is there any other general? I would just say, you know, if you haven't set up a business yet, putting in an hour with an accountant just to go over it. This is what I plan to do. What's it going to cost me? What do I need to set aside? Because, like you said, I say 35% is kind of a good number, but married, single, 5 kids, you know, it just gets so so many moving parts in a tax return that it's just hard to piece together sometimes. So.
I have a question for you. Do you know how well the income tax software is for businesses? Like,
as far as like TurboTax?
yes. Do they do it pretty well?
TurboTax is, it works correctly. The problem is you need to kind of be creative with your deductions. If you don't know to put in your cell phone, if you don't know, if you don't know everything you can take advantage of, then you can end up over-reporting your income accidentally.
For a business.
I wouldn't either.
Yeah, and
How
I
about
would not recommend going to like one of the Liberty Tax or those tax preparation places to have your business tax done.
I would definitely recommend a place that's open year-round.
Right.
Plenty of times I've had people come in and...
I wouldn't do H&R Block either. H&R Block, and nothing against the H&R Block franchise, but they are established to do personal taxes at the end of the year for individuals.
Okay.
And it depends on what your strategy is. I mean, if you have a business and you're trying to get as many deductions as you can, I kid you not, I had a business that went to one of the independent tax places, Liberty or H&R Block, and they were asking about how they get more deductions. And the person that was preparing your taxes told them they should have more children. So if you're thinking about tax strategy, you need to go to a professional, a CPA at an established firm. For your personal taxes, I mean, H&R Block or something like that would probably be fine. But you really need someone with more expertise that's going to ask the right questions and be there if you have an audit.
Yep. The thing with the business is there's a lot of unknown. When you're doing an individual and it's all they have is a W-2 and an interest, a little bit of interest income maybe. You look at the form, you pull up the form on TurboTax, drop in the numbers that are in box 1, box 3, very easy to find. That's very doable. But when you get to a business, there's no structure to it. It's what was your total income, what was your total expenses, and you have to know all that. It can't help you walk you through it. So that's the real issue with trying to do it on the software like that. Yeah. And I've had plenty of people come in that, the tax return ends up, we bill them a couple $100, but I had one last year that he did his own business, and by the time I got done with it, I had deducted about twice what he had down for expenses, and it saved him like $8,000. And I'm not saying every case is like that, but to go ask and just to know they haven't done that way and talk through it with somebody that has done this before. And when I'm looking at a business and I put together a Schedule C, if I look at the business, if I look at the expenses you give me, I kind of know the other expenses you have. And I know what to ask, I know what they look like, I know things that people generally forget, or don't think about, like your home office or your cell phone or things like that. And like I said, at 35%, it's $35 on every 100. It's a lot. So. I don't know.
Yeah, I would encourage you guys to grab their cards.
Yeah.
If you have any questions, definitely reach out to them.
Yep, always happy to answer questions, try to get back within 24 hours or so. So, and if you want to sit down together, we can. If you just want to have a phone call, go through that. Do that too. So,
Thank you.
Yeah,
Yeah,
no problem.
thank you.
Thank you.